We celebrated quite a few equity peaks going into the end of the July series. Been a good year. It was a slow start, but very strong overall during the year. Now we are at or near worst case drawdowns. Our aggressive portfolio all strategy access 70 is at a worst case drawdown, down 49,000, giving back more than last month's gains, but up overall 189 on the year. This was last released. We just made an adjustment in July. We can look at we adjusted the AT 2021 setups, which did not change the results very much, but from January to July, it's about the same, and then July forward. And so you see big drop off this month. We've been here before. We see, when we're at higher levels, this is an aggressive portfolio, so when we're at higher levels, you can see these worst case drawdowns. We anticipate those, and that's why we start on a drawdown. So you can wait for the bounce, you can cut back if you're trading that setup. I would trade this with at least 500,000, so about a 10% drawdown and still up on the year. Let's go over our other portfolios. They are still holding on, and this has just been an extreme amount of chop and wide ranges at new higher levels. And so down 73.22 on the month. For the All Strategy Access Shortlist 51, it's down on a $12,000 drawdown out of 16,821. And let's look at the 51 plus 7, All Strategy Access 51 plus 7. It's in a 21 out of 25K drawdown. So this is a time where you can get in or double down if you were going to trade this before. You see how regular it comes to these levels. A portfolio like this comes to these levels, but over time, you have to anticipate, it kind of diverges so that you get greater drawdowns as volatility increases over time. And so something to consider, and that's the 51 plus 7. And the stock index portfolio, 27. This one is in a 22,715 drawdown out of 24, down 17, giving back all of last month's gains plus about 1,000. And then we have, let's go to the 200K portfolio next. 200K portfolio. This is the setup that we transitioned to on Monday. It's in a $7,770 on this month, giving back last month's gain so far, and a 14,312.50 drawdown at a 16,982. And so we're right there at that worst case drawdown. Let's look at the drawdown curve. You can see it's been here many times before and bounced, and so this is what happens when you get a really choppy market. It feels like it's never done this before. And in the All 78, the level of that strategies, that is a new worst case drawdown. And this portfolio, it is a little more conservative. So we've been here before in this portfolio, and this can be an ideal time to get in. And we're holding on for a bounce on this. We shall see if it doesn't bounce soon or if it makes a worst case drawdown and stays. We adjust. We make those adjustments. And let's look at the one we transitioned from. Let's look at the 200K portfolio that we transitioned from. So we go down, and this is what we were trading. We traded from November to June 30th. Then we changed the AT 2020s, which didn't change results much. And so we had the July 1 through August 13th. And this one is in a 17,162 out of 2747, and it's down 12,000 on the month. Let's look at it accurately so we can see we traded this through starting in August. The drawdown level was at 85.8750. Now we started the month at 51.3250, so it was down around $3,400 coming into the new portfolio. So let's look at the new portfolio. Remember those numbers, down $3,400 coming into Monday, and then we switched portfolios, an $8,500 drawdown. So let's switch portfolios so you can make the comparison. Piecing these together, and then let's flip over here. The daily P&L this week, $3,400. Down $3,400 on the month, and down another $6,400. So down $9,800 on the month. If you consider we were already in a drawdown, so we were 3,400 plus 6,500 is around $9,900, down $9,900 on the month, and you add 6,500 to the $8,500 drawdown, and you get about 15,000. So it's about a $15,000 drawdown when you piece these two together, because we transitioned on Monday to this new portfolio. And so the risk to worst case drawdown here is $2,600. So let's look at the risk to worst case drawdown here, and it is $3,600. So about $1,000 difference. And let's look at the 50K portfolio now. 50K portfolio is in about a $5,000 drawdown at a 10,157. Very normal, down $2,300 on the month. And you see the drawdown curve. So these drawdown curves are very normal. We went through, it's easy to suffer from recency bias, where you're used to the making equity peaks, and then when you have a drawdown, it feels like it hasn't done it before. So let's look at the micro portfolios. Aggressive, good entry points to get in on drawdown. So I say 3 to 5K drawdown is a good starting point for the 50K. So really good entry point to start on the 50K. And this micro aggressive portfolio is it's pretty aggressive, so it's taking the heat on this drawdown. Let's look at the drawdown curve, down 3,000 on the month, and it's been here before. You see how it's been here before, rapid drawdowns to these levels, and this kind of chop. And the conservative setup, 1508 out of 1868. So this kind of mirrors the 200K portfolio for the ES, NASDAQ, gold, and crude oil. So down 842 on the month, and we're coming into the end of the month. We have 1, 2, 3, 4, 5, 6, 7, 8 trading days left. So we've seen this before where we get these drawdowns. This one's extended. Extended from the end of last month all the way into the beginning of the month to the middle of the month, and so just nonstop chop all month so far. So we're working on those worst case drawdowns, or rather approaching them as we as we get an incredible amount of chop in the market. So I wanted to update you on the portfolios. I will update this in the upload this to the portfolio calculator so you can download the latest results through August 19th, 2021. Once again, this can be a good entry point near worst case drawdowns or doubling down if you have the capital to do so.